Alright, I just kind of wanted to make this video to, one, share my breakthrough with ICT, how it's all come together. And I still have a long way to go, but my experience yesterday was incredible, and it's just what ICT's theories or concepts are, and how they, how he perceives the market. And now my understanding of that is, but it's incredible, and I've had that breakthrough, and I just wanted to make this video about it for reference for myself in the future, and to hopefully help some other traders if they come across this. So we're going to do top-down analysis. I'm not going to do any history on how I've got to this point. I just want to share the breakthrough, because it's taken 6 years to get to this point. Okay, well, no, quick history. I started with retail indicators like most traders, and I've come across ICT, and this breakthrough yesterday was incredible, just watching it happen. Don't get this confused with a trade entry, okay, or any financial advice. This is purely just a breakthrough I've had in finally understanding what he's been teaching after 4 or 5 months of doing this, I think. I'm only on episode 10 of the mentorship. I'm about to start episode 12. So that gives you an idea of just how slow I've been taking it and just trying to absorb everything that he says. All of his videos, there's layered understanding to those videos. You can't just watch it once and expect to get it. There's a lot more information in each video that is present, but you're not going to watch it, or you're not going to understand it the first time you watch it. Okay, but anyway, let's dive in. So firstly, we have premium discount, right? Premium discount. Okay, this is using Fibonacci tool, right? Right here and here, you have a fair value gap. It's not marked, right? But we have a fair value gap here, which is in a premium. This is where we'll look for sales, right? And we also have a fair value gap developing there currently, but this candle hasn't closed, so anything can happen. There's also this fair value gap here, which price is now filled. Okay, price is now rebalanced, or the algorithm has rebalanced this. Okay, so we're in a discount. We're looking for longs. Okay, weekly time frame. Now these shaded lines are from his precision trading concepts playlist, I believe, or one of the playlists, if it's not that one. He basically touches on one way of determining bias, or a quick down and dirty way of determining bias, is using the 9 and 18 exponential moving average on a weekly time frame. Okay, so right here price is bearish, it's below the EMA, so it's bearish, but price is now broken through this bias, so now we're bullish. Okay, we're in a discount and we're looking for longs. Now the fair value gap on the monthly time frame is exactly the same as the weekly fair value gap, so I think this is important, right? There's a fair value gap here, and price will rebalance this at some point in the future. Okay, it's also rebalanced to this fair value gap here, right? Daily time frame. So we now have inside that monthly and weekly fair value gap that price rebalanced through here, there was this daily fair value gap which price is rebalanced. Okay, and you can see in more detail that price has broken through the EMA, or the bias. So now we're in a bullish bias. Okay, so we're looking for longs. We're in a bullish bias in a discount. Okay, weekly fair value gap here. You could say this is an order block, but again, I'm still learning this, so for me, for me it's not an order block, even though there is, you know, fair value gap attached to that. Okay, price has already rebalanced this fair value gap into this order block, so for me, not so much anymore. Alright, we have a daily fair value gap that is formed when price dumped through here. Okay, now we're looking for price to rebalance this, and there's also a very small fair value gap here that price needs to rebalance down to a 4-hour time frame. So we have that daily fair value gap. Okay, and you can see there's a big fair value gap there that price has already worked into, and there's also a swing high there. High, higher, high, lower high. Okay, that is important because it's in lesson 12. So again, you can see the daily fair value gap there. Now the first thing I notice when I look at this, okay, is one, no retail garbage. Okay, there's no retail indicators here. I'm not looking at any of that. Okay, all I'm looking at is liquidity, right? So this is sell side liquidity, relatively equal lows. Now, excusing the fact that this liquidity here has been taken here, okay, so therefore this liquidity, this is engineered liquidity by the algorithm. Okay, retail traders are going to look at this and see this as support. We see it as sell side liquidity. Now what rests below these equal lows? Liquidity. We also have a 4-hour fair value gap here that needs to be rebalanced. Okay, we have these lows, but we're not looking at that at the moment. So this is what I was looking at yesterday. And again, working from top down, monthly, weekly, daily, hourly. Let's drop down to a 1-hour time frame. Now, before I get to this, alright, again, you can see more in depth. Retail traders will see this as support. Oh, price has bounced off this level so much it's bound to go up. This is just a retracement, alright? Again, this is that line superimposed on a 1-hour time frame, right? What does the algorithm do? The algorithm targets price, so it runs all of this liquidity because there's stops all below here. Traders have this. Traders have their stops below here, right? And it runs all the way down to a daily fair value gap, which I didn't mark on the daily chart. But there's a daily fair value gap, that 4-hour fair value gap. Inside that 4-hour fair value gap on a 1-hour chart, there's a 1-hour fair value gap. Notice how price runs all the way down to this liquidity. So the algorithm does one of two things. It either runs for stops or it runs to an imbalance. In this case it did both. Right? That's it. Now, I saw this happen yesterday and I was watching the whole thing. Okay, I can't remember what exactly I was doing, but I came back and this had appeared and we were getting a little bit of price action here. We're going to look at that closely. Now, firstly on a 1-minute chart. These are, again, fair value gaps. This is where price displaced into. Let me just go back one. This is what you call displacement. Okay, you have a bit of consolidation and then price displaces. So, I was watching this unfold. I was watching all of these candles. Okay, and I could see that the algorithm is engineering liquidity. Okay, it's taking orders, taking liquidity out of the market, doing its thing. Okay, and retail traders on a smaller time frame will see this as resistance. Okay, oh, price reverse from there, reverse from there, reverse from there. Oh, look, price has run away. So retail traders see this as resistance. Okay, we call that buy side liquidity. Alright, fair value gap right here that's been touched into. Okay, but there's still liquidity here, right above here, which is where retail traders put their stops. Okay, the opposite of this. So I'm watching this unfold, and this is what's going through my head. Here and here and here is RSI divergence. If you look at this with RSI on, you'll see there's higher lows being formed. So down, up, that's called divergence. Okay, when you have lower lows on the chart and higher lows on RSI, That's divergence. It is a powerful tool. Traders do use it, but it's still, in my mind, it's still a retail method. Because with embracing ICT concepts, all I'm looking at is liquidity and imbalances. That's all I'm looking at on the chart. I don't need indicators. Okay, this is all lipstick. Now, when this happened, price went lower yet again. Okay, and it ran out all these imbalances except for that. Okay, so what I'm looking for here, which is what happened here, is a swing high. So there's an imbalance that's been created there. Okay, so the algorithm will target this liquidity at a later date. Okay, we don't know when, but that's not the point. So after this displacement and after that displacement, I'm looking for the algorithm to show me, or a high frequency algorithm to show me something, right? And we have that right here. We have a swing high, which is a high, higher high, and a lower high, right? And again, I was watching this form, and everything that ICT's taught me, or everything that I've absorbed from the videos, I was watching play out in real time. And it's such a powerful feeling that when you're taught something, or when you absorb it and you learn it, and then you watch it play out, and this is a 1 minute chart, this is exact price action to the SAT. Okay, so this is incredibly accurate, and when you're watching it play out, it's this is what I mean by with a breakthrough experience. It was incredible. So we have a swing high, we have an order block here, and when this candle was forming, I was anticipating this to be an order block because we've had this run up, and then you think price is coming down. I thought, hang on a minute, because this is a swing high. Okay, so now I'm anticipating price to break this swing high, and it breaks that swing high right there. When it breaks that swing high, we have a fair value gap form. That's a setup. When price runs stops, liquidities, daily and weekly lows, that's what I'm looking for price to reverse. Okay, looking for a swing high, not so much an order block. Okay, this I could see this order block was forming, but I was looking for this swing high, and I was looking for it to break with the fair value gap, which it did exactly there. That's the setup, right? And then I'm looking for price to retrace into that, and then the algorithm to start targeting liquidity above here, 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 these highs, and so on. There's also little fair value gaps there. Little one there, little one there, little one there. This is all liquidity for the algorithm to target, which means the algorithm is going to start moving up, grabbing this liquidity, and this is a reversal. Okay, but there's also buy-side liquidity here in the form of retail resistance and liquidity here. So all of this liquidity down here I'm looking at like the algorithm has now reversed and is heading higher. Now I'm watching this all play out, and I see the market start to move higher, and I go up one time frame to a 3 minute time frame. Here's that same thing on a 1 minute. Okay, it's not a swing high because that's a smaller time frame, right? But now we have the same thing again, a swing high, high, higher high, lower high, right? Swing high broken there with this candle with the fair value gap. So now I have the same setup on a 1 minute candle and a 3 minute candle. I have confluence across time frames, and you can see how the market traded down. When it created this 3 minute order block, it retraced into the fair value gap, or the imbalances that were created on the 1 minute candle. And all of this is going through my head as I'm watching these candles play out, and it's starting, the whole thing is starting to hit me like what ICT teaches and just how accurate this is. And I can see what the algorithm is going to do. There's liquidity here that the algorithm is playing into. Okay, there's a fair value gap here. Buy side liquidity, relatively equal highs. There's also a 3 minute fair value gap up there, which the 1 minute fair value gap or liquidity is resting in. So I can see the algorithm is going to start targeting this liquidity. Okay, Now, how does it engineer that liquidity? Along here, from my retail background, I can see we're going down and we have a bear flag. If you draw a trend line there and then you clone it and put it up there, you can start to see a bear flag. Retail traders will see this bear flag and they'll think, oh, sell, 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 the market's going down, the market's going down, sell. They sell here right into smart money institutions buying. The institutions use that money to engineer, to allow the algorithm to engineer liquidity. Our algorithm's controlled by AI, but that's separate. I won't go into that just yet. Just know that I'm watching this and everything that ICT's taught is going through my head. Now let's go back to the 1 minute chart. I'm watching all of these candles play out. Okay, so let's walk through it. That 1 minute chart, price retraced into it. And when I saw this candle appeared like this. Okay, there was a little bit of this. I didn't think too much of that. That happened. I'm like, okay, price is retracing this FEG. It's going to head back up. This appeared on the screen as this, just a big red candle. And I'm thinking to myself, shit, whoa, that's so incredibly bearish. It's like an alarm bell, right? And then it closed like that. And I realized that's manipulation. So this is where smart money is doing their thing. So, and watching the algorithm again engineer liquidity, you can see here that's that 3 minute on a 3 minute time frame. That's that 3 minute swing high, creating this fair value gap, retracing into it, and then heading higher, engineering liquidity. Now, there's still liquidity here because it hasn't completely rebalanced this fair value gap like it has here. Okay. So I'm watching the algorithm engineer liquidity, moving up, moving up, moving up, up to here to target these fair value gaps, because this is a bearish order block. Okay, big move down, 2 candles, right? Above this bearish order block is fair value gaps or liquidity, right? And the market moves higher to target that liquidity, right? As it moves higher, it creates relatively equal highs. What do retail traders see this as? Resistance. So you have resistance here, you have resistance here, right? You also have fair value gap here, fair value gap here. So you have all this liquidity above here, and retail traders see this as the price going down. And this is all going through my head as I'm watching price action move out. Now, as the market goes down and creates this here, I'm looking here. There's sell side liquidity here, relatively equal lows. Okay, retail traders see this as support. What's below support? Buy stops. What's below sell side liquidity? Fair value gap. The market trades down into that fair value gap and starts to reverse. We have this big manipulation red candle here. Again, this is smart money cleaning up retail stops. We have this big red manipulation candle here coming down to grab for another dive at liquidity, and then the algorithm starts to turn. And in my mind, I'm thinking this is time. This is time. It's going to rocket through here, because retail traders have seen all of this. The market's going down, the market's broken to the downside, it's taken stops, blah blah blah. They've jammed their stop losses, all of their orders above here. So there's so much liquidity here, right? Smart money's taken, or the algorithm's taken liquidity here, but it's left this liquidity here. So this is just taking orders for it to rocket back up there after it's taken all this liquidity here. This was the breakthrough. This was the breakthrough playing out. This is everything that ICT's taught, and just watching it play out exactly on the screens. Now this trade here, the market just dived yet again. Okay, let's go back one. Okay, the market's gone, I woke up this morning, had a look at the chart, and the chart dived down to about here, and it's currently up around here at the moment. Okay, so it still went further down. So if I'd taken the trade, it would have been a loss. But this wasn't the purpose of this wasn't a trade. The purpose of this was a learning experience, watching exactly, as ICT has said and stated and taught, and the amount of times I've rewatched his lessons to listen in and absorb what he says. The market played exactly how he teaches it. There's, price action controlled by an algorithm. We think it's, from new traders coming in from a retail perspective, think it's buying and selling pressure. It's not. It's an algorithm that takes the orders and engineers price and engineers these candles to move in a direction. Okay? And how does it know where to move? Where liquidity is. It targets the liquidity. It doesn't have an emotional connection. It doesn't care about people's stops. It just knows there's stops somewhere on this chart, and that's where it moves. Okay, so again, this is just to cover. There's a lot more I could go into, but I won't. It's 6 years have culminated in yesterday's experience. 6 years of trading experience and staring at these charts, wondering what the hell is going on. I now know what's going on, and it was so powerful having that moment. But I'll wrap it up. 20 minutes. I'll wrap it up here. I hope this helps. I hope this helps someone. Yeah.